The titular boy of the comic strip Calvin and Hobbes was famously not fond of school. Once, when asked why he rejoiced at a mediocre test score, Calvin simply replied, "I find my life easier the lower I keep everyone's expectations." Now that is a sentiment that corporate executives can sympathize with. The best thing that can be said about the outlook for the US earnings season is that expectations are extremely subdued. First quarter earnings are expected to have fallen 8.1% according to S&P Capital IQ. For the year as a whole, forecasts have already been slashed by 15%, the most since the beginning of 2009 according to Goldman Sachs. The question is whether companies will be able to jump over these lowered hurdles. And so far, the all-too-familiar pattern of companies beating gloomy predictions has mostly held up. Bank of America stumbled, but bellwethers like Alcoa and JP Morgan both reported lower earnings that beat expectations. As a result, and helped by some good economic data from China, the S&P 500 is meandering higher. Wells Fargo's Jim Paulson even thinks that the receding economic anxieties and a solid batch of earnings beats could propel the index to a new record high. And there are good reasons for some optimism. US consumers are in good shape, despite the latest underwhelming retail sales data. Commodity prices are recovering, and the dollar, a significant headwind for many US multinationals, has sagged. The New York Fed's recently launched nowcasting model indicates the US economy grew by 1.1% in the first quarter. Pretty good. But there are some important caveats. Companies are hardly sounding an optimistic note. Higher wage growth could crimp margins, and the market recovery could itself spur the Fed to revisit its exceptionally dovish stance. And if so, the dollar will regain its footing and return as an earnings headwind. So don't be surprised if forecasts prove as fruitless as usual. Because as Calvin also once remarked, the truth is, most of us discover where we're heading when we arrive. This is Robin Wigglesworth of the Financial Times.